Okay, good morning, everyone. I am Lisa Raish. I am the construction CPA. We are dropping the hammer on cash flow problems so you can build things that matter. This morning's topic is exploring accrual-based accounting in construction, the pros and cons. If you remember, we've recently talked about cash basis accounting, so thought I would break it out. We'll talk about accrual. This is your other option. So let's talk a little bit about accrual basis accounting. So what exactly is that? Like most accounting, it's not super sleek and sexy. So but it has its benefits as well as cash basis has its benefits. So kind of let's talk a little bit about what that is. So accrual based accounting or full accrual accounting is when you are matching your transactions, right? It's not when you're getting paid and when the cash is going out. It's actually when you are earning the revenues and you have incurred the expense. You're matching those up in the same period. So if you're working on a project this month, you've invoiced at the end of the month for the work that you've done. That's revenue for this month. And then any of the expenses you've incurred in order to facilitate that project, any of your subs, any of your materials, all of those expenses you've incurred, and you're matching them together, your revenue and your expenses. So when you look at your P&L, you look at your profit and loss statement, you can see more accurately what's going on, what work you did, and what you spent to do that work. Versus with cash basis, cash is going to be when did I get the money in the door, and then when did I spend the money, right? So it's not really matched together. That's really the difference. That's the root of the differences between cash basis and accrual. So like anything else, the accrual basis, while it gets you a more accurate picture, there are going to be things about accrual that are better, and there'll be other things, again, that aren't as good as using cash basis. And you ultimately need to make the choice for you, what works for you in your business and what you're looking to get out of it. So as I mentioned, with accrual, you're getting an accurate financial picture, right? So it provides you with a more accurate result of this is the revenues I've earned this month for the work that we've done, and this is what I've spent on it, right? You're matching your revenue and your expenses together. It's going to allow you to make better decisions, right? You're going to have more accurate information to work off of, and therefore you have better information to make decisions off of. It's going to give you more reliable financial data that will help you to make better strategic decisions in the end. Like, should I take a project on? Should I not take another project on? Those kinds of things. The other thing is accrual allows you to properly do budgeting and forecasting. So when you're building out that forecast as to whether or not you think you can take on another project, it's a lot easier to build out a proper forecast against an accrual basis accounting financial statement versus the cash basis, the dollars in, dollars out. It's also more credible for you to use the accrual basis. So for instance, if you are borrowing money from the bank is going to want a set of accrual basis financial statements. If you are, for instance, trying to either to borrow money or you're continuing to borrow money, and on an annual basis, one of your loan covenants states that you have to provide a set of financial statements. The other thing is, for instance, if you are interested in, let's just say, an outside investor, they're going to want to see an accrual basis set of financial statements to kind of see exactly a better picture of where you're at to determine whether or not, it makes sense, for instance, to invest in your business. So again, pros, right? More accurate financial picture. It's better for decision making, and it honestly is more credible. It's a more credible tool when you're working with third parties, someone outside of your business. So kind of cons of accrual based accounting is it's going to be more complex, right? Cash basis is dollars in, dollars out. It's easier to track, not as much time. With your accrual, it takes more time for someone to record the revenues in your books and then record the expenses. And then when you pay your bills, you're applying your payments against the prior bills. And when you're getting paid from your customer, you're applying the payment against the invoice. There's more work that goes into that. There's a little more need for attention to detail. So it's going to be a little more complex than cash basis. So in some cases, you're probably going to require someone with a little bit of an accounting experience in order to kind of manage that system. There are challenges with cash flow on both sides, right? So with cash basis, it's dollars in and dollars out. Well, when you are doing any kind of cash flow planning, when you're following an accrual set of books, now you're trying to map out when you think the money is going to come in. I earned the revenues today. When do I think I'm going to get paid? I incurred the expense for the subcontractor or the materials today. When am I going to need to pay it? So you have to be very careful with monitoring your cash flow when you're using an accrual basis set of books to ensure that you can, in fact, you're not going to be able to match the cash one against one, right? Dollars coming in, the dollars going out. In most cases, that is not an option. So you need to be more skilled at managing the cash and projecting it out and being able to determine when and where the cash is actually going to ebb and flow. And it's going to be a larger cost or a higher cost for you to manage. For example, you might need a couple of individuals from an accounting standpoint in order to manage this. So there's going to be a higher level of admin costs. You're going to have a couple of people that are managing your accounting system, or a person managing your accounting system as well as your job costing system, so that the two systems do in fact match your jobs. Again, what you've done in the jobs against your budgets, right? All of those things, and then you're matching those together and you're making sure they're driving with each other. So the reality is, while accrual is going to give you a better set of books, the reality is that it's probably going to require you to invest in individuals who, in fact, can produce that set of books for you to help you have that better information. So with anything, there are going to be pros and cons for using accrual basis, just like using cash basis we've talked about previously. So again, pros: accurate financial reporting. You're going to have the ability to make better decisions, and it's just a more credible tool to use. The cons is that it's complex. It can be challenging to track your cash flow, and also it just could be more expensive, right? It's a more expensive option to maintain versus cash basis. If you have any questions, we'd always love to hear them. Drop them in the chat. We'd love to get back to you. We look forward to seeing you here every Friday on the Construction CPA's Coffee Cafe. Have a wonderful weekend, and we'll see you next week.